New introduction here. I want to get everybody's attention for what I feel will be a lucrative opportunity. It's the first ever NYSE marijuana IPO. We're making history here, and I feel this is just the first stepping stone in what is going to be the start of many IPOs on both the NASDAQ and the NYSE. I feel we're going to have a marijuana sector and marijuana ETFs in the future, and this is just step number one. If you are familiar with the industry, that's all I have to say. I know you're interested already. If this is new to you, this is going to be, in my opinion, the greatest financial opportunity in our lifetimes. This has never happened before. We have an established tens of billions dollar industry that the floodgates are going to open. It's becoming more and more legitimate legally, and this is just step number one. So Innovative Industrial Properties is the company. The ticker is IIPR. It is a real estate REIT that invests in medical marijuana facilities. And for this IPO, we have a new website, www.mjipo.com. I put together an hour of research video going through the filings, researching the company and the executives, and establishing a game plan, looking at some other IPOs and how they have traded. We're going to have a chat room with live Q&A during that day, Tuesday, November 22nd. And we'll also have the live webcam where I'll be showing our charts, going over, pointing out key support and resistance levels, looking at the volume that's coming in. I'm really looking forward to this opportunity. I hope you will join us. Thanks for tuning in. Let's get into the charts. Hello, everyone. Checking in on the banking sector. We're going to look at XLF and then some of the inverse bullish and bearish 3 times leveraged ETFs, FAS and FAZ. Then we're going to look at some individual names, GS, BAC, and WFC. So the entire banking sector has seen a full-on breakout with the result of the election, certainly stronger than I anticipated it would be. And this is in large part, obviously, because Trump is president and there's talk of him repealing some of the laws and regulations put in place after the 2008 financial collapse to curb the banks a bit. But regardless of the fundamentals, let's look at the technicals on the chart here. And we have XLF in full-on breakout mode. Volume is declining a little bit as we tighten up and reach a bit of an equilibrium after the breakout. The upper Bollinger Band is support here, 2122. The RSI is high, but the volume certainly has momentum behind here, and we know that this move is for real for the bulls because of this volume. Look at the past 3 days of volume compared to the past 3 months. Bulls are pouring into this. So we have an inside candlestick forming on Friday, and what an inside candlestick is when the range forms completely within the range of the previous day, and it's a double top at 2170 the past 2 days. So if the bulls break that level on Monday, we know continuation is coming, and they'll continue to see higher highs and higher lows. And as long as the upper Bollinger Band on the daily holds, we are in breakout mode. Look at the volume on the weekly time frame. Last time we saw volume even comparable was the dip in February, and it was a bullish reversal candlestick leading to 5 weeks of upside. So that was a big bullish volume candlestick as well. And so is this one, full-on breakout mode. And let's zoom out and see where we stand here on XLF. Big time bullish break. We saw some lower highs forming. We broke those lower highs into August and September, consolidated, and then the election result was the momentum the bulls needed to explode to the upside. And let's zoom out here because we are at all-time highs for XLF, the financial sector ETF. And actually, I need to check 2008. A lot of these banking names now, we're looking back to 2008 before the collapse because that is when, obviously, the share prices were much higher and 2008 really wiping out a ton of gains. But zooming out here to double check on XLF, and it's not at all-time highs, so I do take that back. We do have resistance at the all-time highs of 25.51, so we're not too far off, and we're seeing the highest prices we've seen since that 2008 dump did occur. We're in breakout mode. We have a bullish MACD cross on the monthly, so the monthly chart certainly favors the bulls, as do the weekly, and we'll see if we can get back to those 2008 levels over the next few months. So FAS, breakout as well. This is the 3 times leveraged ETF bull. The upper Bollinger Band is support. We have an inside candlestick here as well. 34.13 breaking means higher highs will continue. In the weekly time frame, very clear breakout on high bull volume, bullish MACD cross, and we need to zoom out here as well to get the next resistance level. Anytime you have to zoom out 8 to 10 years to get resistance levels, you know it's a significant bull break. So we've got FAS, the highs back in 2015, 35.73. So we came within about $1.60 of those levels, And if we break those levels, we know we're in a very bullish uptrend, as those were the highest levels we've seen in years. FAZ is full on dumping. The RSI is oversold, so we can expect a short-term oversold bounce on FAZ. Step one will be getting above the lower Bollinger Band on the daily time frame. And we'll have to update that level at the open each day. The weekly chart for FAZ in a clear downtrend, and time decay is certainly a factor here. Lower highs and lower lows for the past couple years. Middle Bollinger Band resistance rejecting the last two bounce attempts in 2016. So keep an eye on that middle Bollinger Band weekly. As long as that is resistance, we know the bulls are in control of the overall trend for the banking sector, and the bears are in control of the FAZ weekly trend. So now looking at individual names, and we'll look on the hourly time frame because there was a lot of information to be had there this week on this breakout that showed us the bulls were still in control. So for GS, we're in full-on breakout mode. A lot of these names look the same with the RSI high, big bull volume, breaking out, higher low, higher highs continuing as long as the upper Bollinger Band daily is support. We are in breakout mode. Weekly time frame, we're looking back at the highs from 2015, 214.61, and we've broken most resistance levels up until that point, and clearly an extremely bullish week, breaking out to lots of resistance levels and seeing the highs of 2016. BAC breaking out, closing strong right at the high of the day. That suggests strength into next week. High bull volume is keeping up. We're not seeing as significant a drop-off in volume as we're seeing in GS. So BAC volume and price action still very strong. And looking at BAC resistance, we have already broken the 2015 high. So for here, we have to go back to the monthly and zoom back to 2008 levels. Very bullish break this week. And that was not far enough. So here we go back 10 years now. And we're looking up. I see resistance at 45.84. And that was one of the highest prices we saw in 2007. So a very long way to go to recover those levels. But this is currently the highest price that we have seen in about 4 years. And I'm looking at 1897. We broke that level. So this is the highest price we've seen since the dump started in 2008. That shows this recovery for the banking sector is continuing to form higher lows and higher highs over the past 8 years, and this is very significant. So we're breaking out bullish MACD cross on the monthly. So every time frame for these banks is looking really good on the monthly and weekly. WFC was hit the hardest with that scandal that occurred. It is breaking out as well, seeing a little resistance up at 51.93, 51.99. Again, volume dropped off significantly Friday, so BAC volume stands out for the bulls. Weekly time frame for WFC, we have a lot of resistance levels still in place due to that bearish fundamental news-related reaction. And I'm looking up, there's a gap to fill at 52.48. Then we're looking up at resistance 2015, 54.59, and then all the way up at 56.18. So WFC has a lot of catching up to do in terms of turning this trend around, and we can see the volume this week compares to the bearish dump volume once that news really hit and hurt WFC. So certainly not a lead bull. This is the weakest name, one of the weakest names in the U.S. banking sector. Worth keeping an eye on because there was a nice bounce, but if you're looking for a long-term bull, there's a lot of other better long-term weekly, monthly chart setups. So let's look at the hourly time frame and for what will indicate short-term consolidation is coming. And we can anticipate short-term consolidation is coming because of the long breakout that we've been seeing overbought in the short term on these daily time frames. And it rests with the 20-period hourly moving average support. Look at BAC Friday, first thing, bouncing off that support 1, 2, 3 times, considering or continuing for higher highs and closing very strong on the hourly time frame. We look at GS bouncing off that 20-period hourly support 2 times first thing Friday, continuation for the bulls. We've got WFC, same story. Obviously, you're seeing this pattern at this point. 1, 2, 3 bounces, holding that support, heading forward. And let's look at a couple others. JPM lost that 20-period moving average support, did regain it by the end of the day, but that definitely stands out. Other threes held it the whole time. JPM lost it. For these names, BAC, GS, and WFC, we can look for this 20-period hourly support. If we lose that level, that can be an indication for what I call a top fishing play, where we make a bearish entry and we put our stop loss if the high of the move has broken to the upside. So I don't like any of these banks bearish short term until we lose this 20-period moving average support. That will be indication number one, and we'll have a stop loss in place because we are going against the short-term trend. And what we'll be looking for on a bearish entry, losing that hourly support, is a short-term healthy consolidation. Obviously, the bulls own the trend, and it will be a test of the upper Bollinger Band daily support as the first support level once that hourly 20 period is lost. So that is the setup for the trade that is coming. The bulls are still absolutely in control, but we know short-term consolidation is due, and we're watching the hourly time frame for that initial indication. So I appreciate you watching. We'll check back in on the sector. Biotechs and banks exploding on the election news. Lots of bullish opportunity there. Short-term bearish consolidation anticipated, but overall the trend definitely belongs to the bulls on the daily, weekly, and even monthly time frame. I appreciate you watching and hope you have a great rest of your weekend.